Hello everyone, welcome to chapter 13. In this chapter, I'm going to teach you about seasonal tendencies. Now, just like I had promised, level 3 and 4 are going to be completely about time, right? And last week we started level 3 with chapter 12, in which I explained the open high low close concept, which initiated the process of me explaining time to you. Now, each chapter that I'll release weekly in level 3 and 4 will be specifically about time, and I'll make sure that the time aspect of the charts are fully covered till the end of level 4. After that, we'll start integrating everything with each other, and along with that, I'll give you my entry models and everything else that is needed, right? So, first up, we got our seasonal tendencies. Now, this is a really important concept that we're going to be using in our higher time frame analysis, right? This concept has been around for a while, and it's not just ICT traders that use it, but fundamental traders as well, right? This concept is predominantly based around time and takes historical data into consideration. And in this chapter, I'll show you how you can use it to assist you in your higher time frame analysis. So, first off, we'll start off with introducing seasonal tendencies, right? What are they, how they can be used, and most importantly, how you should approach them. So the basic definition I could give you for seasonal tendencies is that basically it's basically a roadmap of the past price action or past performance of assets and different markets, right? Now what I mean by that is that this particular concept takes past historical data from the range of 10 to 15 years all the way to 40, 50 years, and based off all of that data it shows us a particular theme in price action for different pairs and markets. Now we all know that these markets are controlled, right? And there are specific and definite logical concepts and themes that it follows, right? We've already discussed some of these concepts and these things like market profiles and so on. We know that these market moves in a logical framework with specific footprints and signals, right? Now the way we dissect these footprints is by using concepts like key levels, market profiles, daily ranges, and so on, right? Now it's not entirely possible to completely crack what the future would do next and what price is trying to reach for, right? But with the help of historical data, we've seen from time to time that these concepts that ICT has introduced, like market profiles, daily ranges, and key levels, right, when they're combined with each other in a proper way, it can help us and assist us in finding high probability conditions where we can accurately and precisely predict and anticipate price action with a great deal of confidence and accuracy, right? We've came to those conclusions based on the data that we've collected and based on what price has done in the past, right? And the same way we've got this concept called seasonal tendencies, and throughout the help of these concepts we've collected huge sums of data about different pairs from the last 20 to 40 years, and we've managed to summarize that data into specific key points and footprints, right? Now, what that data shows and tells us is there are certain times of the year where price consistently each year follows a specific pattern, theme, or rhythm, right? We know that price goes from one market profile to another. In the same way, it goes from one key level to another. It goes from generating liquidity to purging liquidity and then neutralizing that liquidity and then resetting the whole cycle, right? And all of these concepts, you can see that price is following a logic and a specific detailed cycle with rhythmic sequences and patterns, right? In the same manner with seasonal tendency, we've found out and we've came to know that there are certain times of the years called seasons of times where price follows a specific rhythm or theme, right? Which means that at specific times of the year, price consistently shows that it either forms bearish price action or bullish price action, or it follows a definite trend. Now that is proven by the fact that we've collected data, not we, but actually firms have collected data from the last 40 years, and then they've summarized it, and then that data shows specific footprints and signals that price forms and that price have formed consistently over the past 30 to 40 years, right? So based on that data, we would have some level of idea about what price could potentially do at certain times of the year, right? You can see that now we are talking about time and we are using these concepts to tell us where price could expand and where price could do different things, right? That's the main theme of time, to know when is gonna stuff happen. That's what time is all about, knowing when. The when aspect of the chart is basically the time. Now I'm going to fully explain this to you in this chapter but first let me fully introduce you to it, right? So the second point is that seasonal tendencies should never be viewed as a universal remedy or a be all end all concept, right? And what I mean by that is just like the rest of the concepts, you're never gonna use it alone to predominantly form the trading idea or generate one, right? You'll never approach any concept like that, right? Not even CRT. You must use it and integrate it with the rest of the concepts, right? Before using it to generate trading ideas. In the same manner, even seasonal tendencies are going to be used along with the other ones. And just because seasonal tendencies is telling you something doesn't mean that you're going to marry that bias or force that idea on the markets, right? You can see that all of these concepts are interrelated with each other and connected with each other, and they'll always be used logically with one another and never alone, right? Third point is that seasonal tendencies are used as a confluence to add more conviction and confidence to your already built ideas and frameworks, right? Or simply your higher time frame analysis, right? So seasonal tendencies is used as a confluence, right? Remember that and write that down. And last but not least, I've already discussed this with you, which is that it's a huge sample size of data of the last 15 to 40 years, right? Now moving on, here we got the seasonal chart, right? This is how basically a seasonal tendency chart looks like. Like if you've never seen one before, then this is how it looks like. Now this looks like a typical line chart, but there's a lot of stuff behind it that you have yet to discover and learn. So let me explain. Now before we start, if you're wondering where you could get these seasonal tendency charts, then don't worry, that's not a big deal, right? You can find it from Google or by searching it. But also, if you want me to gather all the important charts for you, and then you can let me know. I'll gather them for you and send it here in the main page, right? Now let's get back to the topic. Now, all of this price section that you see right here is basically a summary of what EURUSD has done periodically and seasonally over each year throughout the last 30 years or throughout the last 3 decades, right? It means that this seasonality chart is showing you the summary of what EURUSD has done on average each year throughout each month over the last 30 years, and it has collected that data and summarized it into this single chart, right? It's a summary of all the price action of EU of the last 30 years, and you can see right here that EURUSD or EU has followed a certain theme or pattern here, right? You can see that during January, periodically and seasonally, based on this data and based on this summarized data, it has gone lower and found bearish price action till the end of March, right? Similarly, it formed bearish price action again during the month of May, periodically over the last 30 years on average, right? Now remember, I'm not saying this out of thin air or out of nowhere, right? This is real, actual, and factual summarized data of EU from the last 3 decades, right? Firms and different institutions have gathered data from the last 30 years and they've summarized it into this single chart. And this chart basically shows us the average of what Euro USD or EU has done, right? Now, what you also need to remember that it doesn't mean that EU has done this price action literally every year, right? It's not like that. It doesn't work like that. It only shows that EU has done this price action or formed this price action on average over the last 3 decades, right? It's taking the average of the data, not the literal data. So remember that too, right? Now, what all of that means is that on average, periodically and seasonally, EU has a tendency to do a certain thing at a certain time during a certain month based on this data, and then you can use this data as a conference and as an extra point to gain conviction in your higher time frame analysis or to support your higher time frame trading ideas, right? For example, EURUSD has a seasonal tendency or a periodic tendency to form bearish price action from January to March, right? Now again, it doesn't mean that it's going to do that every single year and that you should go and trade it right away, right? It doesn't work like that. But what it does show that more often than not, EU forms bearish price action throughout this time frame that I talked about. It has an inclination to do certain things, right? It has a likelihood of forming bearish price action and going lower during May, right? Now again, remember, I'm gonna say this again, it doesn't mean that it's gonna work every time, right? It just shows that it's highly likely, right? And it has a higher probability for EU that it could do that if you can match it with the correct framework and concepts based on the things that I've shown you in the previous chapters, right? If you can combine dealing ranges, key levels, and market profiles to form a trading idea to form a bearish trading idea during the months of January to March, then you can use this seasonal tendency to gain even more conviction, because you know that on average over the last 30 years euro has done and formed bearish price action. And now this year I've used all of these concepts that Sham has shown me, and based on all of those concepts, it's telling me that price will go lower, and now even seasonal tendency supports that idea. So you're going to be more confident in your trading idea that you generated based on the concept that I've shown you, right? So now you can see you can be more inclined to look for shorts or bearish trades during this time of the year from January to March, right? This is how you use it. Similarly, you can see that all of this other price action right here on this chart is showing you, which is telling us that historically over the last 30 years, that is what EU has done on average, right? And this is what EU is inclined and prone to do at these times, right? So make sure to take it with a pinch of salt, right? Remember. Now this stays true for all the other concepts as well, right? For example, if you're using key levels, and if you use key levels alone without anything, then you wouldn't have a single clue about what price is doing, and your accuracy would be shit, right? And you'd be just messing around. But you know that if you use it together with everything else that I've discussed, and that is going to increase your accuracy by a huge margin, and your analysis and execution will become more accurate and precise, and you'll have a great deal of conviction in your analysis, right? Now even though that stays true, we know that it won't work all the time, right? For example, if you take and generate 100 trade ideas and do 100 analysis, then not all of them will work, right? As a trader, we know that these losses and being wrong is inevitable, right? It's a part of the process, right? But what you do know is based on these concepts, you're gonna have an edge, and that edge is gonna make sure that over such a huge record of data, and by doing 100 analysis, you're gonna make sure to have 70 of those analysis correct, right? 70 of those analysis would work, but the rest of the analysis and ideas would not work, and you would lose money on them. But we know that that's completely fine, right? And you can never change that, right? The only way it's going to work for you is if you embrace that fake. If you're going to seek perfection and always look for another thing so that you could perfect the art of analyzing the charts, then it's never going to work for you, because the amount of variables that are involved. But if you just accept that idea, and you always face losses and embrace them, then what you're going to make sure is you're going to make sure that the edge is working for you in the long term, right? That's what trading is all about. uh, but again, you also know that with the accuracy that you have and the trade ideas that you win due to these concepts will give you such a good edge that the profits you earn with the winning outcomes will always outclass and outweigh the losing ones, right? So at the end of each month, or the end of each quarter or year, you'll always end up with profits, right? That's what trading is about. You should never measure your profits on a daily basis or on a weekly basis, right? You should only and always look and zoom out and look at the monthly data and the quarterly data, and then decide whether you're profitable or not. You can have a losing day, you can have a losing week, but that's not gonna decide whether you're gonna be profitable or not, right? That's never gonna decide your future. But what the way how you can measure and gauge your performance is by looking at your monthly data and looking at your quarterly data, right? And then that's how you're gonna know that whether you're profitable or not, right? You know, to remember that you will never be right all the time, right? But with these concepts, you're going to be right and correct more times than you are wrong, which is our objective as a trader, right? All of us are here so that we could learn to win more and lose less, but also at the same time accept those losses, embrace them, and accept them while also winning trades, right? There will always be a balance no matter what, and no matter how hard you try. Even the best traders like Larry Williams or even ICT has losses, even Romeo has losses, right? And they've all admitted to it, right? There's not a single goddamn person who doesn't have losses, right? So remember that. And the next time you take a loss, instead of crying about it or losing your mind, just take a deep breath, step back and hug it and embrace it, journal it and learn from it, right? Instead of letting it mess up with your performance or mess up with your psyche, right? So when you're using these seasonal tendencies or any other concept, there always be times you're going to be wrong, and they are unavoidable and inevitable, right? But when you do 10 analysis, right, based off of this, you'll be right and correct more than you're wrong, which means out of 10 you're going to be right about price at least 7 to 8 times, right? Now, moving on to the next slide, here we're going to discuss how we're going to use bullish seasonal tendencies in our higher time frame analysis, right? And how we're going to be using it and how will it assist us in finding good trading ideas, generating better trade ideas, right? So let's move over and let's learn. So right here you can see that we've got this Canadian future seasonal tendency chart, right? On the bottom you can see the months, which is our time of the years, and on the chart you can see what the Canadian future chart has done seasonally and historically each month over a period of 30 years, right? Right here you can see that 35 is written, which means that they've gathered data from the last 35 years. They've gathered data from the last 35 years and have summarized it into this one chart. And now we're going to be using this seasonal chart to assist us in our high time frame analysis, right? Now, also one important thing you need to remember, and you must write it down, is that this is a Canadian futures chart, right? It's not the forex chart. So if you're trading USD CAD, right, or USD CAD, which is the dollar Canadian forex CFD chart, right, which is a forex pair, then for that particular pair, all of this information and all of this chart would be inverted, because in USD CAD the dollar or DXY side is in front, which means that they've paired the Canadian futures with the dollar, so you're trading against the dollar, right? Did you got it? Let me say it again. This chart right here that you see, this seasonal tendency chart, is of the Canadian futures chart, right? Which is different from the Canadian dollar forex chart, forex pair, the USD CAD. They're both different. They are inverted of each other, right? Because here you're trading with the Canadian dollar, but on the USD CAD forex pair, you're trading against it because you've got the USD in it as well, right? So all of this price action on this seasonal tendency chart will be inverted and flipped for USD CAD, the forex pair, right? So for example, right here you can see that from October to November, the Canadian future chart has historically gone lower and formed bearish price action. Then that means that USD CAD, which is the US dollar against the Canadian dollar forex pair, that particular pair has historically gone higher from October to November. Do you get it? It's completely inverted, right? You can see. It's simple. The whole seasonal tendency is the same. It's just that for the forex pair, all of this is inverted, right? If you traded the Canadian future chart on the future market and not the forex pair, then you can use this seasonal chart without inverting it. But if you are trading USD CAD which is a forex pair and not a future asset, then for that you would invert this chart and use the inverted info, right? You must look at the name before deciding it, right? For example, the Euro USD seasonal chart that I showed you earlier was a Euro USD seasonal chart, which means that if you are trading the Euro USD forex pair, then you would use the same seasonal chart without inverting it, right? Or without doing anything with it, right? Because their name is the same, right? Both are Euro USD, nothing is different. But here this is just the Canadian future asset. There's no USD behind it or in front of it, right? But what you trade on the forex pair is USD CAD, right? And not just CAD. So it will be inverted, right? It's just simple thing, right? Nothing complicated, right? Hopefully you got it. Otherwise I'd be really disappointed. Okay, so let's get back. Right here you can see that seasonally or periodically the Canadian dollar has shown a tendency or likelihood to form bearish price action or to go lower from September to December, right? Which means that historically it's proven from time to time that more often than not, according to this 35 years worth of data about the Canadian dollar goes lower from September till December's end, right? Now, if we're going to use this information on the USD CAD forex pair, then we're just going to simply use the inverted info, right? Simple. So for USD CAD, it would be that USD CAD seasonally has a tendency to go higher during this particular time in these particular months, right? A Canadian dollar has a tendency to go lower, but USD CAD has a tendency to go higher, right? You know what I mean. Now let's look at some price action on USD CAD from last few years and let's see what we've got. So this is the USD CAD weekly chart, right? And here you can see the yearly data from the last few years. Now, as I said earlier, we're going to be using the inverted info and data here, right? So we learned from the seasonality chart that USD CAD has a tendency to go higher from September to December's end, right? Now right here you can see that these rectangles outline on price, and these rectangles represent the time window from September to December from each year. Now we're going to look at all of this price action within these rectangles, which is basically the seasonal times, right? And we'll see if that seasonality for USD CAD stays true or not, right? And how you could have used seasonal tendency to help you with time and your higher time frame analysis. So first off, right here we've got this rectangle which represents the time window from September to December of 2009 outlined here, right? We learned that seasonally USD CAD has a tendency to go higher during this particular time. So now we'll see if that stays true and how often we go higher. And you can clearly see right here during these particular time and these particular months, USD CAD did indeed go higher and found bullish price action, just as the seasonality chart had told us, right? So you can see that it stayed true right here, and you could have used seasonal tendency, which would have given you the right direction for USD CAD during this time. Now remember, we are just using it alone here, right? We haven't even integrated the other concepts with it yet, right? And just for the sake of this part of the chapter, I'm explaining it alone. So just imagine when we integrate the other concept with it as well, and then imagine how much your accuracy is going to increase and how much is going to be, right? So you can see right here, just because of seasonal tendency, you could have been bullish here and you could have looked for long-term bullish swing and bullish swing trades here, and that would have worked out perfectly for you. Next up we've got is this one. You can see price kind of ranged here and had this up move for small time, but overall the price direction was to the downside during this time of the year, which means that it did not follow the seasonal tendencies. But remember, you wouldn't use this alone, right? If you had used the other concepts, then you would have seen that price was indeed in a bearish order flow and structure. That's why it only offered a small upside swing in the overall direction was bearish, and you could have avoided it if you had used the other concepts, right? Next up we've got is this price action right here from September to December, right? And you can see again price from lower price action, which mean it did not follow the seasonality. But right here next year you can see that during this time window price went higher and formed higher prices and bullish price action, right? What you can also see right here is that at the start of the seasonal time window from September to December, we had a turtle soup, and after that turtle soup happened, we kept going higher, right? That initiated this expansion move higher. In the same manner, even next year from September to December, price followed the bullish seasonal tendency for this particular time for USD CAD and formed higher prices. Similarly, next year as well, we formed higher prices and had bullish price action, right? So right here you can see that throughout 8 years in worth of data, and out of these 8 years, price for 6 years successfully formed higher prices and respected the bullish seasonality, right? And followed the bullish seasonal tendency for USD CAD at these time windows, right? Now the two times it did not, you could have avoided it by integrating it with key levels, dealing ranges, and so on, and that would have increased your accuracy even more. But you can see out of these 8 times that we just checked, this data that we just checked, just because of seasonal tendency, without using anything else, you could have been right 6 of the times about price, and you could have expected higher prices just because of seasonal tendencies, right? Now moving on, here we got the next few years data, a few years of data for USD CAD, and we're gonna see the same time window of September to December, and we're gonna see if price did follow the bullish seasonal tendency for USD CAD or not. Now we know that USD CAD is predisposed and prone to go higher from September to December according to the seasonal chart, right? In the seasonality data. And again, now let's see if that holds true. Right here, first one, you can see that this rectangle, and you can see price did form higher prices and had bullish price action, right? Which means that it respected the bullish seasonal tendency. If you zoom in, you would also see that it had a turtle soup and then it kept going higher. You would notice this in all of the seasonal time windows. Similarly, again this time from September to December, this year price again followed the bullish seasonal tendency and formed higher prices, and you can see that seasonal tendency would have assisted you in your higher time frame analysis, and your drawn liquidity would have been right, and you could have successfully traded it on the lower time frame and even on the higher time frame. Similarly, again this time as well, price formed a turtle soup and then it kept going higher from September to December, right? And you can see how good these seasonality are working, right? And I'm not even using the other concepts at the moment, right? And that will be necessary for you to use. So imagine when you combine it with the other ones, and then imagine how much your accuracy is going to be and how good your accuracy is going to be, right? Similarly, you can see the rest of data yourself, and you can see the rest of the year's price did indeed respected and followed seasonal data, and that data stayed true for USD CAD, and it actually had higher prices and found bullish price action during this particular time of the year, right? And price respected it, right? From September to December, we saw from the seasonal tendency chart that USD CAD has a tendency to go higher, and now we've checked around 15 years worth of data, and out of these 15 years, you can see that 13 of the times price did went higher and respected that bullish seasonal tendency, right? You can see that we are now finally using time, right? And we are using time to assist us with our analysis, right? And now at that time, you for now you can see that this is just for the higher time frame, but once we learn all of this, then I'm going to show you how you could do this even on the lower time frames in later levels of CPI, right? Moving on, and next one we've got right here is the Aussie dollar seasonal chart, and again we've got the same framework, but this time you can see that the data is from the last 20 years, right? Now what you need to remember is that there must be at least 15 years worth of data to derive a seasonal function or to summarize a huge sum of data, right? The bigger the data, the more accurate and the more better it's going to be, right? Here we got 20 years of data, which is more than enough to be trusted in, and which is more than enough to be confident in it, right? So on the bottom, we've got the names of the month, and then the data is on the charts, right? Right here, based on this 20 years of summarized data, you can see that the Aussie dollar has a tendency to go higher during the last 2 months of the year, right? From November to the end of December, it has a likelihood and tendency to go higher, right? Now, if you ask me why I chose this particular data, then the answer is that it's random, right? I'm just explaining one part to you here. You can select and choose any data from the seasonal chart, and it'll work the same. For example, you can choose this data from April, and you could conclude that the Aussie dollar has a tendency to go higher during April, right? And if you backtest this, it will stay true for the most of the time, right? So don't think that it only works for specific times of the year. uh, but remember that it stays true for all over the year, right? You can choose any data from here, uh, and 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 just for the sake of the explanation of the seasonal tendency, I've just chosen this data from November to the end of December, right? I've chosen this randomly. You can choose this. You can choose any data you want, right? Now let's look at some charts. So the from the seasonal tendency chart, we saw that the Aussie dollar has a tendency to go higher from November till December's end, right? So let's look at some data based off of that, and let's see if that holds true. So you can see these rectangles again, and these rectangles represent the data from November to the end of December each year for the last few years for the Aussie dollar, right? So let's see. First one right here, you can see that price did go higher and made bullish price action during this particular time, which means that it followed the bullish seasonality and respected it. Second one again, you can see that during this time price followed the bullish seasonality and found higher prices, right? One thing you need to remember is this data is not random at all, right? We are using 30 years worth of data to conclude all of this, right? And that is summarized proper data, right? Not just some random gimmick, right? So remember that price always follows a rhythmic sequence every time, and there's logic behind every move that price makes throughout the year, right? Now again this time, you can see inside this rectangle from November to December, price again formed higher prices and respected the bullish seasonal tendency. Similarly, the next 3 years as well, we only formed higher prices and bullish price action during this particular time, right? You can see how accurately this thing works, right? And I'm only using it alone here, and once we fully integrate it with the other stuff, it will completely change your perspective. Moving on to the next slide right here. Right here, we're going to discuss how we can use bearish seasonal tendencies in our analysis, right? We already discussed how to use the bullish ones, and now we're going to discuss the bearish ones here. Right here, you can see that the DXY or USD seasonal chart, you can see that this is the summarized data for the last 30 years for dollar or DXY, right? And you can see that each month USD followed a specific theme and pattern here with specific characteristic each time, and you can see the average of all of that 30 years worth of data on this chart right here, right? You can see the average. You can see that from January to March ends, it usually forms higher prices. Usually USD or DXY tends to form higher prices from January to March, right? Which means that if the dollar forms higher prices, then the other pairs like Euro USD or GBP USD will form lower prices, right? So if you are trading Euro USD or GBP USD, then you're going to be using the inverted information from here, right? So here it shows that the dollar from higher prices from January to March, which means that on EU it will form lower prices, right? Now moving on, right here you can see this Euro USD weekly chart, right? And these rectangles represent the first 3 months of each year from January to March, right? And we're gonna check this data inside these rectangles, and we're gonna see if price does actually follows the bearish seasonality. And right here, the first time window and price action inside this rectangle, you can see that price did consistently form lower price action from January to March, right? Similarly, next year as well, Euro USD again formed lower prices and bearish price action, which means that it followed the bearish historic seasonality, right? Similarly, the next few years again it followed the same theme and rhythm and kept making lower prices during this particular time of the year, right? And respected the bearish seasonality. This is how you know when and where could a particular pair form particular price action, right? You can see that we are finally integrating time, right? We are using time to see when can we form bearish price action or bullish price action. Now, now during this time of the year, you can be cautious around price, right? Inside these rectangles or from January to March, and you should only look for bearish trading ideas and framework, right? And if you can successfully manage that and successfully integrate it with the rest of the concepts, it will help you a lot. and it will really assist you in your trading and your higher time frame analysis, right? Seasonal tendency will make sure that you never end up on the wrong side of the market side. That is what it will do. So whenever you are doing your higher time frame analysis, make sure to use seasonal tendencies for your respective pair, and then that will guide you to make more informed and accurate decisions. Now, moving on to the next part of chapter, here we'll discuss how we can combine seasonal tendencies with the other concepts to make much more informed and accurate decision, and how we can actually incorporate them together to have a higher margin of accuracy and precision, right? So first one we've got right here is for bullish trading ideas, right? We're going to discuss how we're going to use bullish seasonal tendencies or seasonal or historic tendencies to generate or produce bullish trading ideas, right? And support our long trades. So the first protocol is that combine bullish supporting ideas like higher time frame key levels, dealing ranges, market profiles, and so on during bullish seasonal tendencies, and it will outperform everything else, right? That will make sure you have the best accuracy. Second protocol is that use it as a confluence, right? Don't just buy because there is a bullish seasonality, but instead wait for the right opportunity in framework before buying it. And that framework will be derived from the concepts like key levels, dealing ranges, and so on, right? Moving on, right here again you can see the Aussie dollar seasonality chart, and right here as we discussed before, during the last 2 months, November and December, Aussie dollar usually tends to form higher prices, right? So now we're going to use this fact and use this data to see how we could have used it, right? So let's look at some charts. You can see this rectangle right here. This rectangle represents the last 2 months of the year, from November to December's end, right? And we learned that the Aussie dollar has a tendency to form higher pricing during this particular time inside this rectangle. So let's see if we can combine any other trading ideas and concepts or bullish supporting trade ideas to form an idea or prediction here. Right here, first of all, you can see that we've got this key level in the form of this order block right here, right? And second of all, we've got these equal highs which could potentially act as a target for us, right? What you can also see about this order block is that it's in the discount extreme region of this dealing range, right? So we can use it to support the bullish trading idea, and we can expect price to react off of it. Let's see what price does. You can see price closed above, and not only it tested the key level in the form of this order block, but it also turtle swooped these lows and formed this new order block, right? Now remember, I'm just using simple logic here on a single time frame, right? I haven't even used the higher time frame analysis or the top down analysis, right? I'm just using a single time frame analysis, and still it has such a good accuracy, right? But and remember, when you're using it in your analysis, you're gonna make sure to integrate the top down analysis with it too, and integrate the monthly and the weekly analysis as well, right? Now let's see if price formed bullish prices during this particular time. Right here you can see that price indeed formed higher prices during this particular time and respected the bullish seasonal tendency, and we successfully managed to incorporate bullish trading ideas here, and it worked out for us, right? This is how you basically use bullish seasonal tendencies, right? With the other concepts. Moving on, next up we've got this another bullish seasonal tendency time for Aussie dollar, right? It's the same time from November to December's end, and we've got we know that during this particular time, Aussie dollar tends to be tends to form higher prices and bullish price action. So let's see what happens. You can see if price form this new order block right here inside this bullish seasonal time, right? And you can see this new order block is a bullish supporting trade idea, and now we're gonna see if price forms higher prices or not, right, inside this bullish seasonal tendency. So you can see inside this whole time window, price did indeed respected the bullish seasonal tendency and the bullish trading ideas, and this order block worked and formed higher prices, right? Moving on, here we're going to discuss how to combine bearish seasonal tendencies with bearish supporting ideas and concepts like key levels, dealing ranges, and market profiles, and so on, right? And again, you would follow the same two protocols. So we've got this DXY seasonal chart again, and we're going to use this to see how we could find bearish trading ideas during bearish seasonal times of the year and combine it with bearish supporting ideas, right? And the other concepts. Right here, you can see that from January to March, uh, DXY tends to be bullish, which means that EURUSD is going to form lower prices at this time of the year, right? So let's see how how could we analyze it. You can see on EU we've got this rectangle which represents the time from January to March, right? And we can see the price had a turtle soup during this particular time, and then after that price did indeed respected the bearish seasonal tendency and formed lower prices and bearish price action. You can see that you could have used this bearish seasonal tendency and you would have been on the right side of the markets and you could have profited off of it, right? Again, another example right here, you can see that price from January to March formed lower prices after the turtle soup and it kept going lower to form bearish price action, right? If we had used bearish seasonal tendency, then we would have been right and we would have been on the correct side of the markets, right? And our accuracy and precision of the higher time frame would have been outstanding. This is how you use seasonal tendency to act as a confluence is a major confluence in your whole higher time frame analysis, how you can use it to gain a great deal of conviction in your analysis, right? First of all, we're going to discuss the time aspect for the higher time frame here, and then we're going to keep moving lower to the lower time frame and discuss the time aspect for all of the time frames, right? And then after going through level 3 and 4, you're going to have finally cracked the time aspect of the charts, and your whole perspective would be completely changed, right? You can not only use seasonality for higher or lower prices, but also you can use it as a filter as well, because you can see on the seasonal chart that certain times of the year price forms a range and a ranging profile, right? So you could use that data to be more cautious around price during this but that particular time of the year, and maybe even stay risk off because you know the price is ranging and it's not forming any expansion anytime soon, so you could have a break there, right? You can see that it's such a good concept because it's based on huge sample size of data and it works all the time, right? You've seen the example yourself of the years of data that I shown you, and it almost work every time even without using the other concept, right? But make sure that you're going to use the other concept as well to attain or achieve the best results for it.